Today is Monday, April 18th. This is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, ADMIS Vice President of Grain Research, and Alan Bush, ADM Investor Services Senior Financial Economist. Alan, starting with the financial markets this morning, what will the Fed Chairman Powell say about the global economy when he speaks to the International Monetary Fund this Thursday?
Okay, well, he is scheduled to speak to them, and I think he will focus on inflation, and not just here in the U.S., but globally. I think he will be rather hawkish in his commentary as far as just how aggressive the Fed is likely to be in raising rates at upcoming meetings. I think he'll strongly hint that at the May 4th meeting, the Fed will raise by 50 basis points, and I think possibly give some indications that there will be a series of 50 basis point increases at subsequent Fed meeting. Of course, he'll also talk about the situation, I think, in Ukraine. So I think he has a wide variety of topics, but I think it'll be inflation that has the most emphasis.
Precious metals markets, Alan, specifically the gold market, what are the major support and resistance levels for the June contract?
Okay, right now the next near-term resistance is at 2018. Other than that, there is really not much until the recent highs that come in at 2082. Support, at least at the near term, is at the 1970 level. So the technicals seem to be supportive for the gold, and I think that there will be a trend toward higher prices in both the gold and the silver, but probably more so in the gold.
And finally, Alan, looking at interest rates globally, which of the major central banks are the most hawkish and which are most accommodative?
Okay, well, right now, by far, it's the Federal Reserve that is the most hawkish, with such strong hints about a series of rate hikes. The Bank of Japan has been the most accommodative and very adamant in their stance and rhetoric that they are not about to take away the accommodation anytime soon. And in between is the Bank of England and the European Central Bank. So to take advantage of this, we would have to remain bullish on the dollar index, since the Fed is as hawkish as they are, and remain very bearish on the yen, with that central bank likely to remain very dovish for quite some time.
Thanks, Alan. Steve, as we start the week looking at the grain markets, corn and soybean futures are making new highs. Why? And do you feel we'll continue to trade higher?
Well, I think that in the corn market and soybean oil market, a lot of people in Washington are blaming the Russians and the war in Ukraine for inflation. And I think for those two markets, it is almost true that there's about 600 million bushels of corn that normally comes out of Ukraine this time of year that probably won't be shipped, and that 50% of their crops may not get planted because of the war. And in soybean oil, sun oil and rapeseed oil is trading at $1 a pound. So 80 cents a pound in nearby soybean oil futures is cheap. And we are the cheapest oil in the world, and the oil that is more available to a buyer. We've also noted that palm oil is taking up some of the shortfall, especially into China and India. And so right now, I think those two markets are still on an uptrend because of supply worries.
Steve, what are the technicals saying right now about the grain markets?
Well, the soybean market is very, very interesting because it continues to rally without an increase in open interest. It's not overbought yet, so it just seems like it's just kind of inching up, whether it's because concerned about the South American supply running out in July, especially in Brazil. But a lot of funds are unwilling to buy soybeans right now because of the China economy slowing and the COVID lockdown restrictions. So the soybean oil market is not overbought. It has a count right now of trading as high as the July contract at $18. Corn market, on the other hand, has seen an increase in open interest, and I think that's new buying because of what's going on both in Ukraine and the increase in U.S. Demand both for corn exports and ethanol. It is becoming overbought. We've reached a target of $8 on the jog. We need a correction, but we don't know what that correction might be. 30-day outlook suggests farmers could get the crop planted on time, which could trigger a correction. But up long-term, market signals technically that we're going higher. In the wheat market, again, no increase in open interest. Kansas City wheat continues to trade higher. It's not overbought. Technically speaking, we have an objective of July Kansas City wheat of $13.60.
So, Steve, in light of the technicals and where the grains are right now, probably the most important question, should farmers be selling this rally? What should they be doing? And on the other hand, what should investors be doing?
Well, first of all, farmers have sold more new crop grain, corn and soybeans to date than ever before. And I don't think they're real happy that they've sold those values at below the market. So until they get the crops planted, I think they're not going to sell anything. And that's make the cash basis stronger, and it's inverting the spreads. And so I think the farmer's going to stay at the sideline. If I told them to sell $8 corn, they probably wouldn't today. Just like if I told them to sell $17 beans, they wouldn't, even though these are historically high prices. Every day I get phone calls from people wanting to know, as an end user, should they buy corn? Should they chase this rally? Should they buy meal? Should they buy wheat? The wheat flour users globally have really decided that, we got to buy this thing. It's not going to break. The corn buyers are waiting for a break, while the meal buyers are also waiting for a break. So I think the end users are standing aside with sticker shock.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.